Hello, and thank you for tuning in to the channel. Today, we'll discuss what decentralized finance is all about. Before you begin, be sure to like and subscribe to our YouTube channel for more future updates. What is decentralized finance, DeFi? Decentralized finance, DeFi, is a new financial system based on distributed ledgers that are similar to those used in cryptocurrencies. The system decentralizes authority over money, financial products, and financial services from banks and institutions. For many consumers, one of the most appealing aspects of DeFi is that it eliminates the costs that banks and other financial institutions charge for utilizing their services. Instead of depositing your money in a bank, you can save it in a safe digital wallet. It can be used by anyone with an internet connection without needing permission. Finally, you can transfer funds in a matter of seconds or minutes. Now it's helpful to know how centralized finance differs from DeFi in order to comprehend decentralized finance and how it operates. Centralized finance. Your money is kept by banks, corporations whose overarching objective is to make money through centralized finance. Third parties who facilitate money flow between parties abound in the financial system, each charging a charge for their services. Let's say you used your credit card to buy a gallon of milk. The charge is sent from the merchant to an acquiring bank, which then sends the card information to the credit card network. Decentralized finance. By allowing people, merchants, and corporations to perform financial transactions using developing technologies, decentralized finance eliminates intermediaries. Peer-to-peer financial networks that use security protocols, connectivity, software, and hardware developments are used to achieve this. You can lend, trade, and borrow using software that records and validates financial transactions in distributed financial databases from anywhere you have an internet connection. A distributed database is accessible from multiple locations. It collects and aggregates data from all users and verifies it with the help of a consensus process. Through personal wallets and trade services tailored to people, DeFi applications provide users more control over their money. How does DeFi work? Blockchain technology, which is also used in cryptocurrencies, is used in decentralized finance. A distributed and secure database or ledger is referred to as a blockchain. dApps are the applications that conduct transactions and run the blockchain. Transactions are stored in blocks on the blockchain and subsequently validated by other users. If all of the verifiers agree on a transaction, the block is closed and encrypted, and a new block is created containing information from the preceding block. The information in each subsequent block chains the blocks together, giving the blockchain its name. There is no method to edit a blockchain since information in prior blocks cannot be modified without impacting subsequent blocks. DeFi financial products. One of the basic tenets of DeFi is peer-to-peer (P2P) financial transactions. In a P2P DeFi transaction, two parties agree to exchange Bitcoin for goods or services without the involvement of a third party. Consider how you obtain a loan in centralized finance. To completely comprehend this, you'd have to apply for one at your bank or another lender. If you're authorized, you'll have to pay interest and service fees to use that lender's services. In DeFi, you'd enter your loan requirements into a decentralized finance application (dApp), and an algorithm would match you up with peers that matched your requirements. After that, you'll have to agree to one of the lender's terms in order to get your loan. Defi Currency. DeFi is meant to conduct transactions using cryptocurrency. Because technology is still evolving, it's difficult to say how, if at all, existing cryptocurrencies will be applied. Stablecoin, a cryptocurrency backed by an entity or tied to a fiat currency like the dollar, is at the heart of the concept. The future of DeFi. The evolution of decentralized finance is still in its early phases. For starters, it is unregulated, which means that infrastructure failures, hacks, and frauds continue to plague the ecosystem. Current laws are based on the concept of distinct financial jurisdictions, each with its own set of laws and regulations. The potential of DeFi to conduct borderless transactions raises important problems for this form of regulation. Who is in charge of investigating a financial crime that occurs across borders, protocols, and DeFi apps? For example, who would be in charge of enforcing the rules, and how would they do so? Before DeFi may be used safely, several concerns must be solved and developments achieved. What does decentralized finance do? The purpose of DeFi is to eliminate all third-party involvement in financial transactions. Is Bitcoin a decentralized finance? Bitcoin is a type of digital currency. DeFi is being built with cryptocurrencies in mind. Thus, Bitcoin isn't so much DeFi as it is a part of it. That's a wrap for today's video. What are your thoughts on our list? Let us know what you think by leaving a comment down here. Also, don't forget to like and subscribe to our YouTube channel for our latest videos.